Question 1C covered the topics of journals and ledgers from Unit 3, as well as incorporating the earlier part of question 1 on returns of stock. So what we were specifically asked to do was to complete D. Edge's account in the debtors subsidiary ledger for February and then prepare it for the next reporting period. So what's important to remember is in a subsidiary ledger, we use the actual dates, not the end of the month. We use the actual dates of individual transactions. So all we had to do was start from the beginning. So the first thing we were told at the beginning of February was that D. Edger had a balance of $3,400. So that would have gone in as a debit on the 1st of Feb. Then during the month we needed to find all the sales that D. Edger made from us, or we made to him, on credit. So in this case we have one on the 6th of February, and they bought $2,400 of goods plus GST for a total of $2,640. So we use the actual date, get our referencing right, sales / GST clearing, so we definitely need to write clearing and not GST. Then he also paid us back some money and got given a discount. So we got paid back $2,000, gave them a discount of $50. That's a decrease in their account of $2,050. So that would make their account go down. So that would be a credit entry on the 7th of Feb, and our reference would be bank / discount expense. They were the ones that were given to us in the question. What we then had to incorporate was in 1A, we'd actually gone and recorded a sales return. And specifically, we lowered D. Edge's account by $660, so we made a credit there. And our reference needs to be sales returns / GST clearing. So we can see this figure here relates to this number here, and the debits opposite that are there. So the two accounts are sales returns / GST clearing. And that was kind of the extra or the more difficult mark for this question. So we're now done. So what the question did say is prepare it for next period. So we need to balance it by figuring out the bigger side. Now it's an asset account, so always the debit side will be bigger. So we add up those two numbers there, 3,400 and 2,640. We get 6,040. Going to put that on the other side. Subtract away the other two numbers of 2,050 and 660. We'll get a balance of 3,330 on the 28th of Feb, and then we better carry or prepare that for next period by bringing down the balance on the 1st of March. Looking at the marks, there was one mark for getting the sale on the 6th of Feb, one mark for getting the cash received and the discount given, and one mark for the sales returns. And what's interesting is there are no marks there for the balance. So let's looking at that. Looking at the average is 1.7 out of 3. 24% of students got 0, up to quite well answered at the top end. 34% of kids got 3 out of 3. What's interesting to note is that you had to get the 3 marks by recording all entries accurately, so dates and also the references. Making sure you balance the account and carrying it forward. However, what's interesting is to note that there were no marks for balancing. What the mark or where you lost a mark was if you didn't balance correctly. So make sure even if there's no marks for something, you're not going to know that while you're doing the paper. So if you just balance it every time, you're going to be fine.